Hey, good morning, everybody. It is Saturday morning. This is Multifamily Unplugged, and I am certainly glad that you are here today. Hey, welcome back. If you've been here before, if this is your first time to the show, then buckle up because you are in for a big ride this morning. Well, I'm excited about our guest. We'll get to that in a minute, though. Like every Saturday, I talk to you about your intentions, right? What are you being intentional about? We walk through life sometimes not thinking about things or thinking about not enough of the right things. I'll always want you to think about your intentionality. I named my company My Core Intentions because I think that it's really important that we go out, we talk to people, we do things in our life that are intentional, right? Hey, it's great to be spontaneous. It's great to come off the cuff from time to time, but for the most part, are you intentional? I know when I was selling residential real estate that it was really important for me to be intentional about my practice, my getting up and getting on the phone, calling sellers, calling potential sellers. And if you're an investor today in residential or multifamily, wherever you're an investor, are you being intentional about your outreach, about locating and sourcing properties? How about your investor partnerships? Or your limited partners? Are you being intentional about those conversations? So if I can help in any way, don't hesitate to reach out. Today's show is sponsored by My Core Intentions, and I want everybody to know that our summit is coming up. The Multifamily Summit, October 20th through the 22nd. It's going to be the biggest virtual event of 2022. You're not going to want to miss it. The stage is packed with speakers. So 3 days of speakers, not just me. I'm just going to moderate, but we're going to have Brian Briscoe, who's going to talk about leveling up on multifamily. We're going to have John Kasman there. We're going to have Bronson Hill, who's going to talk about raising private equity. Mike Angelo, one of my past coaching clients who's scaled 800 units in multifamily in the last year. You're not going to want to miss this event. It's going to be 3 days, 20 speakers, 2 rooms, panels. We're even going to play cash flow. And if you've ever played the game cash flow on a board game, but haven't played it virtually, it's something that you're going to want to experience. And it's going to be a great 3-day event, plus some VIPs, some giveaways, some other things. So don't miss it. October 20th through the 22nd. Go register now at mycoreintentions.com /summit, and it'll take you right there. Okay, a little bit about my guest this morning. I'm joined today by Clive Davis. I'm excited about Clive. We've talked a couple of times over the last year or so. Clive has an interesting story that we'll talk about, but he practiced corporate law for years, transitioned from there to multifamily. I always say that must be an easy transition, right? Well, we're going to see as we talk to Clive. He joins us from Atlanta this morning, but let me bring him in. Clive, welcome.
Good morning. How you doing, Mike?
I'm great. How about you? Good to see you again.
Yeah, good to see you. I'm doing great.
I was trying to think, when was the last time we talked, or we originally connected? God, it's got to be 8 months ago or so, right?
Yeah, at least. And a lot's happened in those 8+ months. But
yeah, well, I'm excited to get into that. That's for sure. Hey, listen, so one question I always ask my guests at the beginning of every show, and I say that I think I'm going to write a book about this one day. So if somebody's out there and they're a ghostwriter, I'd love to talk to you. But in one word, what best describes you personally and professionally?
I would say integrity would be that word for me, and it's one of the 3 kind of pillars of my company, Park Royal Capital, and it comes from the importance that I personally place on integrity. And if anyone's talking about me or now or in the future, I want integrity to be a part of that conversation.
Yeah, absolutely. It's interesting that you said that, because I don't think anybody has ever said that word that I've asked them that question. So it's kind of interesting that, that you bring that up. I think it's a great word that we should all live by. when we say we're going to do something for somebody, do we follow through with it? Or do we behave in the same way when nobody's looking that we behave when somebody's looking? So why is integrity important for you?
I'm just a big believer, probably influenced by how I was raised and kind of my experiences, life experiences, both personally and professionally. But for me, and then also, I'd like to think that, I was the type of lawyer who was trusted and did the work that I did with integrity. But for me, if you're going to be successful in business, uh, people need to rely on you, and they need
Mm,
to rely on, if you tell them something, if you commit that you're going to do something, they need to have confidence that you're going to follow through and do that. And it's no different with investors.
yeah.
You have a fiduciary responsibility to any investor whose money you take to invest on their behalf, and if they have any doubt as to whether or not you're going to do what it is that you said that you're going to do, that does not lead to success. And so for me, it's just critical in business, but also in your personal life.
Yeah. We are held at such a higher standard when we raise capital. Clive, if you give me $5, I'm held at just a higher standard than even just a licensed real estate professional. So, it's interesting. So I think that, that is a space that we do need to walk in consistently. So thanks for saying that. And my mom would be really happy to know that you lived your life that way. So,
Great.
um, hey, listen, tell us a little bit about you, your background, how you got into the crazy world of real estate, because, it can't be, it's not a easy transition from anything, right?
Yeah, so professionally, I started out practicing as a corporate transactional lawyer, working for a Wall Street firm in New York after law school. So I did that for several years. Ultimately, I was a capital markets professional attorney, doing debt and equity offerings, not too dissimilar from some of the stuff that I'm involved with today, although different client base. But that's kind of how I got my ground in professionally, and got my boots underneath me. And then I made the transition into the pharmaceutical industry as initially in-house counsel for a pharma company, and then later I went on to become a chief compliance officer for a different pharmaceutical company. So all in all, I had a 20-year corporate career.
Hmm.
And the one thing I'll say is, throughout those 20 years, my very first investment in real estate was back in 1999. I purchased a duplex down in Florida. I was still living, working in New York, and purchased a duplex investment property. And the way that came about was that my parents had retired to Cape Coral, Florida back in 96. And so I thought it was a great opportunity for me to make this investment. I opened up a checking account. I put my parents' name on it. I had the rents going into that account, and that was my way of subsidizing their retirement without them having to ask me. So whenever they would say, something's broken, or this needs to be repaired, or, I'd be like, that's okay. Just go get the money from your account.
Yeah.
And that was my way of being hopefully a responsible son, and helping out on the family front. And so it wasn't anything that I was reliant upon in terms of income. I was blessed to be well compensated in my 9 to 5. So I would say that, that was more, although I self-managed it with their assistance, I would say I wasn't viewing it as a professional investment. It was more hobby like, I would say, especially given that, like I said, I wasn't reliant upon the income in order to kind of uh, make ends meet. So that was my first investment. I held that very long term. I ended up holding that until 2018,
Hmm.
after I had left corporate life. And then I went on to add a 5 unit to that. And then the property that I once upon a time lived in New York City, We've had that rented for more than 20 years now. So
Wow.
throughout my 20-year corporate life, both as a lawyer and then later a chief compliance officer, I always had some rental real estate, even if it was, smaller scale, at least relative to what I'm doing now.
Yeah, interesting. So that property in New York, and you just kind of caught my attention with that. Uh, rent control or market rate?
Market rate. And I'll for those folks who've kind of followed the Amazon story. So they had proposed, there was discussions, and they were pretty far along in placing their HQ2 facilities in Long Island City, New York. Well, the location where they were under discussion to place that second headquarters was actually adjacent to the building where our apartment is. So directly on the East River, across from the United Nations, on the waterfront there on the Queen side. One stop from Grand Central, two stops from Times Square. So amazing location. When I first bought that property there, it was the lone building on the waterfront. You go there now, the whole waterfront is lined with high-rise luxury rentals. And so
Wow.
it's a booming part of New York City at this point.
Well, interesting. So well worth holding on to for 20 years, huh?
Absolutely. I've told my children that they will inherit it, but they are not to sell it, to keep it in the family.
Yeah, interesting. Hey, a word that occurred to me while you were talking about being in the corporate world is burnout. 20 years, practicing law, chief compliance officer. Did you experience burnout doing that?
Yeah, I don't think I ever characterized it that way, but I probably experienced it at different points. I don't think it's, one day you walk in and you're burned out. I think it's a progressive thing that, kind of chips away at you over time. Again, I was blessed to be well compensated in the various roles that I was fortunate enough to be in. But at the end of the day, you're trading your time for money. And I got to the point towards the end of 2016 when I just basically said, look, if not now, when?
Yeah.
And the question I was trying to answer was, you've always had this kind of entrepreneurial itch. You've always had this kind of steady interest in real estate. How might you combine those two interests or passions? And if you don't do it now, what are you waiting for? When are you going to have the opportunity to do it? So everyone in their own life has got to figure out, what's my exit strategy? How do I pivot? How do I venture outside of my comfort zone to see what else in life exists and might be something to pursue? And so, for me, it wasn't a risky transition. I said to myself, worst case scenario, if this doesn't work out, this leap of faith that I'm taking, I can always go back and find a good job, probably a six-figure paying job. It might not be something I'm passionate about or that, I'm saving the world. But nonetheless, the family is going to be fine. We're going to eat. Our needs are going to be met. And so I just got to that point where I said, what am I modeling for my kids? I talk to them all the time about getting outside of their comfort zone and doing things that they're passionate about, not necessarily based upon what pays best.
Yeah.
And then I just looked in the mirror and said, am I modeling that? And so for me, the answer was, go take the leap of faith.
Yeah. Yeah. Awesome. Good for you. And not looking back, it sounds like.
Not anymore. There were points in the transition. You know this, Mike, where you may get a call or someone reaches out to you and says, "Hey, we've got this opportunity," and I tell people that for the first time since I was 18 years old, after I left corporate life, that was the first time I experienced more money going out of my household than was coming into my household on a monthly basis. So that took some adjusting to, and definitely required me to get comfortable outside of my comfort zone. When you're getting that direct deposit every 2 weeks and you're well compensated, you get somewhat complacent, and the entrepreneurial journey, there's nothing guaranteed about it, including your income.
Yeah. But the thing is, right, Clive, and you could probably agree with this, is when it's in your blood, it's in your blood. And I tell people all the time, I'm unemployable. I've worked for myself since I was 23 years old. And, just because I'm set in my ways and like to do what I like to do, I'm
Yeah.
unemployable. So, hey, Clive, so I know some things have transpired for you over the last few months. You've purchased some assets. Why don't you talk about that a little bit? Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets. Just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com.
Yeah, so I got awarded my first large deal last summer of 21. We ended up closing that deal, a 244 unit acquisition, multifamily acquisition here in Atlanta, which is where I is home for me and also my target market for multifamily. So we got that 244 units that we acquired for just about 30 million. We raised $8.25 million to get that deal done. And, as law of the first deal would have it, that the week that we closed that first deal, we were awarded a second deal, a $40 million deal, 200 unit acquisition, also in Atlanta. So we closed that second one in February of this year. So probably about 6 months ago. And, I've been focused on asset management and ensuring that our business plan is being implemented, even while I'm looking to add additional properties to the portfolio.
Yeah. Hey, so it's interesting. If I caught this, you bought 244 units for 30 million and 20 units for 40 million.
200 units for 40.
Right. Yeah. So, did you buy that second one on the upswing of the market, or was it a different class?
You got it. So the 200 unit is a mid-90s vintage property, B class, whereas the first property, C class property, early 70s vintage.
Okay.
So really apples and oranges in terms of kind of the property type and vintage.
Yeah. So isn't it interesting though that even a C class deal today, 68, 1968, is still bringing 123,000 a unit?
Probably more now. I can tell you that we went out to dinner with the closing broker for that first property, the C class 70s vintage. And at that time, obviously the market has shifted a little bit since then with what's going on with rising interest rates and what have you. But he told us at that point in time that if we were to give him back the property and he were to take it to market, he would be taking it out to market between 140 and 145. And this was only a few months after we closed. So part of that is hopefully we bought right. And then the other part of it, a big part of it, is just what was going on with the market.
Yeah.
Yeah.
Either one of them value add?
Both of them value add, definitely doing interior unit renovations on a selected basis, definitely addressing any deferred maintenance, as well as just updating the amenities. We've done some good things. We've done a conversion of a bathroom in the clubhouse to a full kitchen now space. We've equipped a gym, laundry center, things of that nature that are going to improve the lives of residents. I can tell you that first property, they had been without a pool for a couple of years. They had been without a gym for a couple of years, as well as a laundry center. So, going in and implementing those portions of our business plan has really been received very well by our residents.
So here's something I want listeners to get this morning, and I find this very interesting. Right? You kind of you dabbled in real estate while you were in your W-2 job, made the transition, said now or never. Right?
Yep.
If not now, when, I think is a comment you made. And now here, all of a sudden, just a few months later, you own 400 units.
Yeah, so I would say I'm not an overnight success. So it's definitely more than a few months, because I started off, my first LOI on a property was in 2019. So if you include kind of the dormant period of COVID, which kind of interfered with a lot of things real estate related, it took me the better part of 2 years before I landed that very first one. But again, once I landed that first one, that same week, I was awarded the second one, and I've been off to the races.
So on 70 million, and I have my calculator out, by the way.
Yep.
On $70 million worth of real estate, you probably have to go raise about 17 or $20 million.
A little bit more. So the first one we raised $8.25 million, and the second one we raised just about $13 million.
So how do you, somebody new in the space, go out and raise, $22 million?
You learn and appreciate very quickly that this is a team sport. And so I don't know many, if any, who are taking these deals down by themselves with their own wherewithal and resources. So you've got to surround yourself with a team, and the more experienced that team, the better. And you leverage what they bring to the table, and hopefully you make a valued contribution to the team, and then you rely on everyone to kind of play their roles. But I have 3 core partners on both of these deals, and each of them had done probably a half a dozen deals prior to partnering with me on the first one, and then subsequently the second.
So what part of the process do you play? What in the team, what moving parts do you keep floating?
Yeah, so I'm the only partner who is here in Atlanta. And so the role that I play, and I basically, I'm the one who will follow up on any potential leads. So if something lands in my inbox or their inbox, more often than not, it's my inbox, just based upon kind of my relationships. I will underwrite the deal A to Z, get all of the inputs from the third parties that need to go in to inform that underwriting. I will tour the property. I will further the conversations and discussions with the broker. Ultimately, I'll present that opportunity to my team and say, here's what I think we should offer. They'll take a look at it, give some inputs. We offer on it. And then all of us have a responsibility for raising capital. So that doesn't fall to any one person. That's everyone on the team reaches out to their respective networks and is engaged in capital raising. So I do that as well. And then really post-closing, that's where I really step up, because again, I'm the only partner here. So I take the lead in terms of asset management. So we give our properties to a professional third-party property manager. But as you know, Mike, one of the things that you're responsible for as an asset manager is to oversee that relationship. And at the end of the day, while they're handling the day-to-day, someone's got to ensure that the business plan is being implemented according to plan. And so, I take the lead on that. I'm the one who visits the property periodically. I'm the one who engages with vendors and contractors and what have you. So everyone chips in, but again, for obvious reasons, I take the lead on that once we take down a deal.
So let's talk about asset management for a minute. Top 3 KPIs that you look at or want to know that you're property manager is really keeping abreast? What are those top 3 KPIs?
It varies from property to property, but I would generally say, when we have our weekly calls with our property manager, one of the things that I am focused on is, obviously, where are we from an occupancy standpoint, physical occupancy standpoint, and then obviously, where are we in terms of kind of future expectations? So where are we from a pre-lease standpoint? So things that I'm focused on that relate to that are traffic. So I want to know what's going on with traffic and then our conversion of that traffic. So in the apartment business, the things that you're generally focused on is getting people in the door, and to the extent that you're able to, keeping people from leaving the back through the back door.
Well
So
spoken.
yeah, so I want to know what we're doing in terms of renewal. Retention rate is an important one for me, because you can have a lot of traffic, you can be bringing in new people, but if you're losing people through the back door, then you're not really going to make progress, and there's potential for you to lose ground. And so those are some of the things that I think about, when I'm thinking about keeping my finger on the pulse of what's going on with a property.
So sales training for your property management on-site people?
What about it?
Sometimes I wonder if sales training might not be a good way for property managers, leasing agents to really have some of that training. I think sometimes they can get so caught up in the fundamentals and the metrics that they forget about the people piece, right?
Yeah, and I think at least in our case, when you engage a third party property manager, one of the things that you're expecting or at least hoping for is that you're going to have a team, and they are going to have systems set up, and they're going to offer their people training, and you're going to get quality people. That's not something you can necessarily control, and you monitor for it, and where improvements or changes need to be made, you make those improvements or make those changes. But we don't directly get involved with that training. Again, we hire a third-party property manager. Our property manager happens to manage, I think, north of 7,000 units in the Southeast. They're headquartered in Atlanta, so most of those units are here, but they manage units throughout the Sun Belt in the Southeast. And you make the changes as you need to, and we've had to do that for at least one of the properties.
Yeah, interesting. All right, let's talk about raising all that capital. I want to circle back to that for a minute.
Yep.
Did you go out and raise that capital all from private investors, or was that institutional money?
Yeah, so thus far, with the 2 properties that I discussed earlier, we raised that 21 and change million all through syndication with friends and family. And so all retail investments, no institutional dollars or checks. That is something, it's a great question. As we start to look at deals that require us that are a little bit bigger in size, it becomes somewhat challenging to raise those larger sums, 50, 75, 100K at a time. And so I can very easily see, perhaps even on our next deal, we will do somewhat of a hybrid. We'll raise money the way that we have, but we'll supplement that with an institutional check or checks. And I'm starting to have some of those discussions now as I eye bigger deals, bigger opportunities.
Yeah. It's interesting, as you start to add units and your volume grows and your experience grows, you start to attract that institutional side of the world. So whether it be a teacher pension fund or a union fund, insurance companies, I was amazed the first time I closed an institutional deal with an insurance company. And the story behind that is, I asked my mom one time, I said, "Hey, who owns that big building?" And she said, "Insurance company." And I
Mm.
was young, right? Had never had any idea. And as soon as I closed that deal, I remembered what my mom said. So it was interesting, because there's a lot of money, a lot of capital out there for that.
Yeah, it's just got to figure out how to access it. So
Yeah,
if anyone's listening to this and they're an institutional check writer, I will take your call.
yeah. Call Clive right now because he's got something up his sleeve. I can tell.
Yeah.
Um, so you raised all that capital, 50, 75, $100,000 check writers?
Yeah, our minimum investment on those two investments was 75,000.
Okay.
And as you know, Mike, whatever you set the minimum at is generally the mean that people gravitate towards. So we
Yeah.
had people who invested more than that, substantially more than that minimum. But as you know, most people, especially if they're a first-time investor with you, they're going to gravitate towards that minimum.
Yeah. So looking for deals today, are you still focused on the Atlanta market?
I am. Atlanta is a phenomenal multifamily market. Regardless of who you speak to, it's generally going to be in the top five
Mhm.
multifamily markets. The position will change depending on who you're talking to, but Atlanta is a phenomenal multifamily market, and it's not kind of a overnight success. It's been a leader in multifamily for the past more than a decade now, and
Yeah.
and folks don't necessarily appreciate that. So, as good of a run as multifamily has had over the last 12 plus years, Atlanta has been a lead in multifamily market throughout that period.
Yeah. Yeah. It is a great market. So where do you see the market going? There's talk today in the news, inflation. We know interest rates are going up. The Feds are meeting again next month. They'll raise them again. Where do you see the market going, and how are you mitigating your way through that?
Yeah, so I don't foresee any near-term collapse impacting the multifamily market. I think what we're going through now is best viewed as a healthy kind of recalibration, if you will.
Yeah.
And I know even as rates are continuing to rise, and you're right that they will go up next meeting, I think in September, probably another 50 or 75 basis points. We'll see. But we're already on the clock for when interest rates will start retreating and coming back down. And so if you're buying a property today, the interest rate environment 18 months to 2 years from now is most likely going to be more favorable than it is today, as we're in a rising interest rate climate. We're likely to be in a decrease in interest rate climate. And so, that's something to be factored in. But generally speaking, all this uncertainty means for me is that I just need to be more conservative in my underwriting, and build in more kind of protections, downside protections, just recognizing the reality of we're living with rising interest rates.
Yeah.
And I think, an environment like this just enables a good operator to differentiate themselves from a mediocre operator.
Yeah.
And so I'm not in any way deterred. I'm very much desirous of and planning to close another deal before year end. And you're going to adjust the loan product that you're going to put on the asset. You're going to be tighter in your underwriting and assumptions, and you move forward. For me, with the supply and demand imbalance that we are living with, depend on who you talk to, whether it's 2 million to 5 million um, households, housing units that we're short of what we need as you look forward. That imbalance isn't going to come in balance anytime soon, and we're struggling just to keep pace with the new annual demand. And so even if we keep pace with the annual demand, we're not doing anything to close the gap of that broader, like I said, 2 to 5 million, depending on who you're talking to.
Yeah.
So I think housing is going to continue to be a solid place for you to invest. You got to be smart, like any investment. but I don't have any concerns that are brought on by the rising interest rate climate that we're in right now.
Yeah. And I think anybody with some experience and knows how to be conservative on underwriting and not exaggerate in their underwriting is going to do fine, right? So, hey, this has been very interesting this morning. I'm glad that you and I had a chance to reconnect. Any thoughts that you would give a new investor, somebody starting out in the business, somebody starting to want to dive in? What kind of direction or guidance would you give them?
Sure, and I have a lot of these conversations, so I find myself regurgitating some of the same advice. But there are a few things. One thing I would say is anyone who tells me, Clive, I want to leave corporate, I want to ultimately do what you're doing, I will tell them the advice that I would give them is you need to invest in one of these deals. Doesn't need to be my deal. Find someone that a sponsor that you know, like, and trust, or get to know, like, and trust, and invest with them. And beyond kind of the ROI that you're investing for, one of the things that you're going to get is free education. You may say it's not free because you have to invest to get it, but nonetheless, you're going to get education as a passive investor about how these deals work, how they're put together. What does the capital stack look like? How do you present these opportunities to investors? What do the business plans look like? And so when you get ready to venture further down this path and you ultimately get your first deal, as we talked about a number of times during our conversation, Mike, capital is going to need to be raised. And when you need to go out to your network and say, I've got an opportunity, it's my first deal, please invest $50,000, $75,000, $100,000 of your money into it. If you get the question from one of your investors, and the question is, Mike, have you, great opportunity. I saw it in my email. Tell me about the first investment like this that you did. And if your answer is, you know what, I've actually never invested in one of these deals, but here are all the reasons why you should invest in my deal and me.
Yeah.
For some people, maybe your family members are going to be like, it doesn't matter to me. We love Mike. He's a great guy. We're going to invest with him. Other people, that's going to be a red flag that tells them maybe Mike's not as committed to this space as he needs to be. If he's never, he's asking me to do something that he himself has never done.
Yeah.
And so it may come across as self-serving, but I tell them, look, invest in at least one of these deals if you're aspiring to ultimately do these deals and take people's money and be that fiduciary that we talked about earlier.
Absolutely. 100% well spoken. I can't believe the number of brokers I talk to that don't even invest in their own product. One guy told me the other day, he goes, man, I sell it all day long. I have no interest in investing in it. And I learned when I first started selling residential real estate, and this was back when interest rates were 17%, by the way. So people shouldn't be afraid of 4 or 5% because it's still historically low, right?
Absolutely.
But I learned way back then that you should buy your best listing. And I sold residential, buy your best listing every quarter. And I don't think I bought one every quarter, but I bought one or twice a year. I bought one.
Yeah.
And, housing is always, served well. Clive, it's been a pleasure. 3 bonus questions. Ready? Buckle up.
Okay.
Favorite restaurant?
I'm going to say Slutty Vegan. Look that up. Look it up. It's going to be
Slutty Vegan.
Slutty Vegan. Yes.
Okay. Where's it at?
So I think they've got 8 or 9 locations in Atlanta. They just opened one in Birmingham, Alabama, and they are getting ready to open one in Brooklyn. But the company just got valued at $100 million. I believe that company will be $1 billion company in the next few years and rival Burger King and McDonald's.
Wow. Interesting. Slutty Vegan. I'm going to write that down.
Yeah.
And best book you've ever read?
I Know Why the Caged Bird Sings by Maya Angelou.
Wow. Interesting.
Yeah.
Okay.
Nothing to do with real estate,
No,
but everything to do with life.
I've heard of that book before. So interesting. How about best tourist attraction?
Best tourist attraction. Wow. I'm originally from London, so I don't know anyone who's ever been unhappy seeing the sights of London, whether it's the Tower of London, whether it's Buckingham Palace, any of those great tourist attractions. I've never heard any bad reviews.
Very cool. Awesome. Well, Clive, thanks for being here. How do people reach out to you if they want to connect, talk to you about your capital raising efforts, and maybe even talk to you about, one of your offerings you have coming up?
Sure, I'm on social media. I'm on LinkedIn, Facebook, Instagram, but the best way to get a hold of me, I'm quite proud of our recently launched website, which is parkroyalcapital.com. If you go there, you can learn more about me. You can see recent deals I've done, and you can also book a call with me. I love having conversations with folks about real estate. But parkroyalcapital.com is the best way to get a hold of me.
Nice. Awesome. I encourage people to reach out to you. Clive, I'm going to move you to the back room. If you hang out with me for a minute, I'm going to say goodbye to everybody, and we'll talk in a minute.
Sounds good.
Thank you. Thanks for being here. I appreciate you. Hey, everybody. That was a great show this morning. We covered a lot of ground. Might have been a little bit higher level than for some people, but for some people, you might have really got inspired. And I know he inspired me this morning to do a couple of different things, like reach out and talk to more people that you're an investor in what you do and how to go build your business. So I appreciate you being here every Saturday morning. Remember, every Saturday morning, Multifamily Unplugged, go tell somebody about it. We're live on Facebook, LinkedIn, YouTube, wherever you get your social media fix, you'll find us. Enjoy you being here. Remember, coming up October, the Multifamily Summit, 3 days virtual event, 20 well-known national speakers, panels, 2 rooms going on. We're going to play the game Cash Flow with Michael Zhao. It's going to be an exciting 3-day event. You're not going to want to miss it. So if you're getting into multifamily real estate, if you're in it, if you need to learn more, if you need a shot in the arm, whatever the reason, go register right now at mycoreintentions.com/summit, and we'll see you at that event. Before that, though, we will see you here next Saturday morning at 10 a.m.